My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to My Trading Game Plan. Of course, I'm Gareth Soloway here to deep dive into the charts this morning and give you the database trade setups of the day. Big news today, folks. Number one, we're hearing from more Fed officials that they do not think a rate cut is warranted in December. The markets, again, have basically been saying, yeah, they've been hawkish, but we're still going to go with the rate cut. Now the Fed is coming out stronger and stronger against a rate cut in December. The odds after the last Fed rate cut were about 75% that we'd get one in December. We've now moved to a 50-50 coin flip for a rate cut in December. So we'll have to watch and see how that plays out. We are seeing the 10-year yield move up on some of these latest Fed comments about potentially not cutting the rates, the interest rate in December. Now, we did get the government to reopen, so government is reopening. We did see the rally on Monday due to this, so notice how today the markets are actually starting to sell off. In other words, the markets had already factored in the government reopening with the rally we saw on Monday. We're now way past that. We're now focusing on things that I've been giving you warning about. What are they? AI bubble, data center issues where people are, or these companies are now halting data center buildings or builds because of no power sources for them. We've talked about how the money's getting shuffled back and forth between or inside of all these players, all incorporating OpenAI. OpenAI saying they're going to spend $1.4 trillion in the next few years, yet they literally have no money. They're losing money consistently. No one knows where they're going to get this money. All of these things, again, bringing me roundabout to thinking we're due for a bigger correction. And by the way, just yesterday, we talked about how the AI trade, these hyperscalers are using a depreciation scale on chips that they're buying of 7 years, when in actuality, these chips are losing 90% of their value in the first 2 years. So again, that's artificially inflating their earnings because, again, they're only taking a small amount of depreciation versus likely what they should be taking. All right, into the charts we go. Let's take a look. The S&P futures are sliding this morning low here. So again, if we looked at where we closed yesterday, we closed right over here at around 68.75 on the S&P futures. We're currently trading around 68.50, so down about 25 points on the S&P. That's not a big move, but one thing I'm watching is the low from yesterday and the aftermarket low right here. Look at where we're currently trading. The markets are trying to break this key low from yesterday. That is something that's catching my eye as a day trader today that could insinuate some more volatility in the markets. If we flip over to the S&P 500 and flip to our weekly chart, again, you guys know, listen, I've been steadfast. I believe that this is a top in the near term on the S&P. We fell last week. We're bouncing thus far this week. Again, we're still down today, so we'll have to see where this goes. But my guess is, again, we're due for a correction. My downside target on the S&P is a move back to 61.50 to 61.40. That, again, coexists with the former high before the liberation tariff sell-off that ensued. So it makes sense that we would revisit this, right? You have this monstrous up move with almost no pullbacks along the way. This is the likely scenario based on probability of where we could go down. Now, what percentage type of drop is that? Let's do that right now. From the all-time highs, that would be a drop of about 11%. From where we currently are, it would be about 10%. We're just a little bit off of the all-time highs currently. So we're looking at basically a 10% pullback in the markets, which honestly would be your run-of-the-mill pullback, and it would also bring you to a technical level. Now, do I think at that point we're going to go back and make new all-time highs? Honestly, I don't know. These are the things where the further you project out, the harder it is, because there's so many factors that come into play over time, right? When you only have a window of, let's say, a week or a month or a couple months, it's easier to predict based on charts because the charts are obviously changing. The longer you go out, the more change can occur and the more probabilities can shift. And that's what we do here, right? Verified investing, no BS, just charts, which AKA means probabilities in terms of likelihood of move. QQQ, I'm continuing to focus in on the Nasdaq 100. Again, the Nasdaq 100 is important here because of this parallel. We have all of these highs all along here and right through all of these levels since May, right? We just tagged this high. We had this great drop. They saved us right here, getting us back above, but now we're starting to come back in. What we're watching here is, do we get below this trend line? And if we do we confirm a breakdown? If you confirm a breakdown, then you're looking at a correction, just like the S&P is looking very likely at a correction back down about 10%. 10% would be a drop down to, from here, let's see, that would take us back to about the 60, let's say 550 level on the QQQ. It'd be about a $70 drop on the QQQ right now. And the QQQ, by the way, folks, that is the Nasdaq 100 tracking ETF. I love using that because it's very liquid. It gives us a very clear picture. We could use the Nasdaq too, but the Nasdaq, again, is a little bit different because the Nasdaq 100 is specifically 100 stocks, mainly focusing on those mega caps. Like literally the top 10 stocks make up 50% of the Nasdaq 100. So it's really focusing in on what are the mega caps going to do in the next, let's say, month or two. Okay, let's go to a few other charts here. The dollar today is inching down slightly. Notice again, we came into resistance on the DXY just above 100. It's now coming back in. The one thing I'm noticing here is there is kind of an uptrend trend line like right here that we're kind of looking like it's trying to break. Again, nothing major here. All that would do would potentially let us fall back into this lower level around 96.50. But again, just something I wanted to make note of today to you. The 10-year yield. So we know that if the Fed is more hawkish, it means they're less likely to hike interest or lower interest rates, which means that projections or the 10-year is likely going to go up, and that's exactly what we're seeing. So the 10-year yield bouncing a little bit today. Again, this is still within a range, right? We've been in a range for the last 2 weeks, but right now the 10-year yield is inching up just a little bit this morning. Now, again, one of my major thesis points for why I expect this market to have a correction is obviously rooted not only in the S&P chart, but also in the data that's in the SMH, the semiconductors, right? So I think we can all agree the chip stocks, the AI trade has been the driving force of this market. And again, for those of you that are newbies, we continue to track this chart. This is the weekly 200 moving average, and this is the extension. The furthest away in 2021 we got from the 200 moving average, 102% above it, and then we corrected 45%. In 2024, we got 102% again away, and we corrected 40%. And guess what happened? We were right here a few weeks ago, 102% above, and now we're looking at a potential correction on the SMH. All data driven, right? While everyone else is all about the hype, I always look and say, okay, the hype is one thing. Now let me confirm, is that hype warranted based on technical analysis? And right now it's not. Right now, it's literally telling us the opposite of all the craze, all the money flow. By the way, last week, we saw the biggest inflows into the semiconductors ever. Maybe not ever, but actually it was ever. It was ever into the SMH. And again, that's another topping signal. When you see people just saying, throw it all in the SMH, the semis, that's a problem, especially when you're 102% above the 200 weekly moving average. NVIDIA this morning is cratering here, folks. Again, look at this drop on NVIDIA this morning. So again, this is one of those stocks that we're watching like a hawk. Why? Well, because we have this trend line right here that we've hammered on multiple times, each time bouncing. The latest time was our biggest pierce, and they still saved us. But at some point, remember how charts work and trend lines work. The more you hammer on it, the weaker it becomes until it fails. And so the more we hammer on this trend line, if we come down again, the odds begin to increase that we could see a breakdown in the NVIDIA trade here, right? So again, Cummings down again, that would be 1, 2, 3, 4, 5. That would be our sixth hit. The odds are probably about 70% chance that we break through that versus bounce again back to new all-time highs. Those are pretty darn good odds. All right, one stock, guys, that I did pull the trigger on in terms of yesterday's shorting with members of Smart Money Stocks and ETFs. I couldn't help myself. I just had to start a short position in CrowdStrike. Why? Well, basically, I just used the charts, right? So regardless of the hype, I tuned that out. And I noticed that look at this zone right here. Look at this trend line. over and over again, we hit it and we pulled back. We hit it, we had a massive pullback. We almost hit it and still had a pullback, and then we hit it again and we pulled back. So again, here, we even hit it here and had a small pullback, but look at this yesterday, right into that level. And the idea is that we should see a pullback. Now, a lot of you guys could say, well, don't we know that the more we hit a trend line, the more likely it is to break out? That would be a correct assessment, but it's different. All right. Trend lines that are upsloping, you can actually hit them over and over again, and it actually increases your chance of a pullback because you're getting more and more overbought. However, downsloping trend lines, you can only go so low on a stock before it gets to be a good value, which means eventually you break out. And so this would be this sort of scenario here, where again, where valuation is high, it's higher, it's in the stratosphere. Okay, boom, pull back. The odds favor that bigger pullback. Here, valuation's getting cheaper and cheaper and cheaper until it squeezes and then causes that move to the upside. Very good chart to understand the price action. Speaking of price action, these stocks, the supercomputer stocks, even some of the AI stocks like CoreWeave, these stocks that are in the crypto sphere like Circle, holy cow, what drops they've been. Now, are there opportunities here? The answer is yes. Take a look at QBTS here, guys. QBTS is actually starting to get a little interesting. If it flushes down, let's say $23.75, you start to hit some good support here. Now, I don't think this becomes a good long-term buy level, but as a swing trade, yes, I am paying attention to QBTS. All right. Other stocks, Oracle. Oracle, we've talked about before. It continues to kind of take a beat down here. This is one that, again, remember, they had the biggest backlog. The stock was up 45% intraday on earnings, basically kissing $1 trillion market cap. Since then, it's basically done nothing but go down. This, my friends, Oracle is a warning sign to all the AI players and the hyperscalers, right? So again, look at this collapse. It's down again today, but you know what? It's getting close to some major levels here. Look at this area here. This is very interesting coming down into this range here. Now, eventually, do I think it's going to fill this gap? Yes, but I do think it's getting to a point where it's getting oversold, and there might be a good bounce opportunity. CoreWeave, again, AI hyperscaler play. Look at the breakdown this has had. Again, we're now approaching a pivot line here at around 83-ish or so. I'm not interested yet, but I will be watching very closely. We start getting towards this $63, $64 level, which again, it seems like a far way away, but really you just double the drop here. This move to here, replicate that, and you're right into that level. Former pivot high. The RSI is starting to get to the extreme oversold levels. Those are things that I will pay attention to. Circle, look at Circle here, guys. Gap fill approaching on Circle at 83 and change. That, again, should yield a technical bounce on CRCL. All right. One stock I love as a short is this one here. It is Sandisk. It's down this morning. This stock is so overbought. It is about as ridiculous as can be. Again, look for a massive correction in this. First stop would be around 239 to 240 gap fill. That would only erase the last 3 days. Look at the weekly chart. Look at this chart on the weekly. Look at that vertical move. And remember the way vertical moves go. It stretches the rubber band until it snaps. And the further it stretches, the harder it snaps back. What goes up sharply comes down sharply. What goes up gently comes down gently. That's a technical analysis ideology, essentially, in the charts that we want to remember. So that, again, look for a big correction. 240 is just a stopping point. It probably bounces there, and you're likely going back under 200 on this stock. Earnings today. Take a look at Disney. Disney falling on earnings. They missed slightly on revenue. But let's be fair. Number one, we know the consumers are hurting. Right? Consumers are hurting out there. Number two, Disney's kind of fumbled the ball a few times in the media. And again, I'm sure that's not helping with people wanting to go to their parks and being on Disney Plus or whatever the heck it's called, right? So ultimately, again, it's probably partially the consumer is just strapped. We know that. I mean, a lot of you guys, a lot of us feeling that pain of going to the supermarket and being like, holy cow, how did this food that I just buy costs $120 or $150, or at Costco $350, right? All of that feeling, seeing all the other bills in our life go up, up, and up, and then being like, hey, listen, I just can't go spend $400 on my family just to get into Disney, or $500, or whatever the heck it costs these days. All right, in terms of technicals, what are we looking at here? Disney's not making a big enough move to get me excited yet. If it did have a bigger drop, the first day trading level would be at 106 Pierce. There's a gap fill on that. It's really only about $5 away, so that would not be outrageous. And then there's a huge level here at 102 Pierce right there. High pivot and another gap fill right there. Obviously, I think eventually it goes down here. But for day trading today, these are the two I would watch. For swing trading, this would probably be my level down here. All right, Cisco Systems up on earnings pretty sharply, although it is starting to come back in. The biggest thing on Cisco, guys, and this could be ominous, right? This could be an ominous warning sign, is that Cisco, again, traded as high as around $80. You know what $82 is? It was the high from the dot-com bubble in 2000. Cisco has never, I repeat, never gone back to that level. And that, to me, my friends, is something that would be a double top. Let's go to our monthly chart. Look at this, guys. Here's your double top on Cisco. In 2000, it was about $82. And again, we're at 78 right now. It was as high as 80 on earnings. But this could be an epic short, number one. And number two, it also could be an ominous warning that Cisco has now gotten or nearing its dot-com highs. Now, listen, Cisco has grown into it. The PE ratio in 2000 was ridiculous. Now it's much more of a good, solid company. There's no doubt about it. But again, the question is, it's running up because it's supplying, it's a lot of the infrastructure for these data centers. I would just offer that we just talked about how data centers are potentially being stalled out some places because of the amount of energy they're going to need. Where do they get this energy? Do our energy bills triple and quadruple for you and I just so a data center can operate? I personally don't think that's right. And so I think you're going to see some pushback from political players on these data centers, mainly because of what it's going to do to the consumer, the individual citizen, and their energy bill. All right. Let's go into some charts here. Gold today, it kissed my next level. We went over this level yesterday, this little underbelly here around 42.50. You can see we literally came up right underneath it right there, are pulling back. But I will say that this has been a great rally in gold this week, right? This has been fantastic for gold bugs. The question is, can it break through here? If it does, it likely is going to revisit the double top all-time high. So this is kind of your last resistance until your all-time high double top. Then obviously we'll have to watch and see what happens at double top. If it comes back down, it broke through this resistance. This will be minor support on the way back down. Technically, we still haven't confirmed above that too. And then if we break that, then we start looking at our low here to the downside. So I think one of the things, if we summarize gold, number one, great move this week. Great move. Nothing to be taken away from gold. I think, again, there's a rotation going on out of technology stocks, out of the AI trade. We're seeing NVIDIA get crushed this morning down. We're seeing other names in the AI space continue to rotate. Pfizer's had a fantastic run. You guys know I've been talking about Pfizer for like multiple months, how it pays a 7% dividend, and the chart is ripe for a rotation of capital. The last 2 days have been fantastic for Pfizer and many of these other drug stocks. But ultimately, again, we'll have to watch and see where gold goes here. Silver has double topped. I did short some silver at double top here. So far, that looks good. It's pulling back just a little bit. Remember, I'm a swing trader, so this is going to be in and out. It could be in and out today or tomorrow or early next week. It's nothing about the long-term trajectory. I still own my precious metals in my long-term holdings, right? But either way, we have the parallel here, which again is the bigger parallel bear market high in 2011, financial crisis low in 2008, COVID low 2020, and this is a double tap of that parallel plus a double top on price. And so it should get some sort of pullback here. It looks like it is starting here early in the day after an early surge overnight, starting to come in just a little bit. Flipping to oil here. Oil again, getting a small bounce, had a pretty nasty sell day. Notice what I put in. I put in basically parallel lines. Technically speaking, the cup and handle is still okay, but I don't like wide range red candles like this. So again, I don't view it like if you're talking about percentages before yesterday, the odds that it was a good pattern setup were probably in the 70%-ish range that it was going to go up. After that wide range, yes, it's still holding the parallel, but I would lower that to about 60%. So it still favors a little upside here, but it's not as resounding as it was based on probability as it was yesterday. All right, and then natural gas, guys, which has been on an incredible breakout streak here. If we look at nat gas daily chart, it's basically flat today, but it is certainly closing in on that upside resistance zone right up here. Look at that breakout of this trend line, and then this is where we're going to run into a lot of resistance, and I likely would play it as a swing trade short there. Obviously, I can't say for sure, but obviously, if it gets into that level, I can let you guys know if I decide to short it at that point. But I do think it's getting overbought. I mean, at this point, if we look at the weekly chart on nat gas, it has run now 70%. So 70% since August. So again, it's long in the tooth. I just don't have the resistance yet to short it. If it got up here, it would be up like 90%, let's say, or 85%, and it would also be into resistance. And that's where I would step up most likely and pull the trigger on a short. All right, guys, as always, I try to do a question or so here this morning. First question coming in about Lockheed Martin, LMT. Can you do chart analysis on LMT? Sure, I can. Absolutely. Let's take a look at LMT. Wow, look at this. I have old analysis that I've left on my chart here going all the way back here. This was major support. You can see it got close, but it never actually tagged that gap fill. That actually would concern me that we could actually still go down there because that gap was never filled. There's also another gap down here, which is a little problematic. All right, let's start fresh, though. All right, so we've had this great move up here. I'm on the weekly chart, by the way, so we can stay on the weekly. So let's look at this. So what am I seeing here? Let's look at this as a trend line here, and I haven't looked at this chart prior. Looks like there's a very significant trend line, an uptrend going back to 2018. So look at what I'm finding here. So here's your hit, kissed here, and then hit again right here. So if you get down to about 420, that's going to be your line in the sand. That's also these lows here. Look at this right through here. That's right through that area. So there will be support here at around 420. I don't know if I will play that. My concern is that we've already hammered on this low here, right? Once, twice, and 3 times, and even 4 times. And then we've also hit this upsloping trend line 3 times. So this would be like a 4th and 5th hit. The odds are now at about a 50-50 it would break when it hits that. And so again, I'd much rather err on the side of caution and just say, okay, worst case, I miss a bounce, but at least I'm not getting into a trade that could be a borderline major breakdown. And if that does happen, I mean, you could be going back all the way down to 375 here, maybe even down into these lower ranges down here. Good question, though. I love bringing up questions that, again, guys, I don't look at those charts usually with you guys because I think it gives us the ability to kind of do stuff out of the box. All right, let's take a look at MicroStrategy's MSTR, guys. This is an interesting chart, and it is not a good chart. All right, so MicroStrategy's here. Look at this. Let me bring up my charts. I apologize there, guys. There we go. On MicroStrategy's, look at the breakdown. Low pivot, low pivot, low pivot, broke, but then it recaptured, but then it really broke. And this is not a good sign because not only have you broken this, but look, we're now trading below this support. All right. So again, this is another breakdown here. Potentially, it's kind of borderline still, but another breakdown on MicroStrategy. Now, wherever there's a breakdown, you guys know me. I'm like, okay, but where can I buy it? Because a flush out where panic and fear comes in yields opportunity. And if I'm looking at this, I've already actually scoped this out. I am looking to buy in at around $180 to $185. Look at all these pivot points here on the chart. This should act as major technical support. Right in here, we had a little hit there, then it broke out, then it did a retrace, and off it went. This here should be very good technical support. Now, listen, I'm not coming out and proclaiming, oh, I think MicroStrategies is a great long-term investment. I honestly am a little fearful that they've taken on as much debt as they have, et cetera, whatever. I'd rather just buy Bitcoin, frankly, if I'm going to buy Bitcoin. But as a swing trader, heck yeah. There's always an opportunity long and short in the market, guys. You just have to show me a chart that goes too vertical to the upside or too vertical to the downside. Remember, be agnostic in trading. You don't care about any company. We just want to make money. Long or short, I'm a money maker. Let's do it. All right, you guys have a great rest of your day. Thanks so much for tuning in to the game plan, my trading game plan today here at Verified Investing. Don't forget, share it with friends and family. If you liked it, if you think they'll like it, then share it. That's all I ask. Thank you guys so much. Have a good one. Take care.